Last but not least, we have types of credit or credit mix. So credit mix comprises three different attributes. You have revolving accounts, you have installment loans, including mortgages, as well as bank issued credit card accounts. Revolving accounts are credit accounts in which the monthly payment varies based on the amount owed. The borrower may defer a revolve payment on part of the balance. FICO high achievers have an average of 11 revolving accounts. Installment accounts are credit accounts that have a fixed payment for a fixed period of time. Installment accounts usually are for a single large purchase, including auto and home. FICO high achievers have an average of 5 installment accounts. Last but not least, you have bank issue credit accounts. So bank issue credit accounts are a subset of revolving accounts. FICO high achievers have an average of 6 bank issue credit cards. Now, I've talked about this in several other videos about how there's a difference between bank issued credit accounts and consumer finance accounts. So consumer finance accounts are just like store types of accounts that are issued from the company, whereas bank issued accounts are institutions, banks, credit unions that actually issue credit cards. And there's a difference in how FICO treats that. So having more bank issued accounts versus consumer finance accounts is going to be more beneficial to your FICO score. Now, just some of the key takeaways, right? In terms of payment history, you want to be cognizant of any derogatory information that's reporting, and it can affect your credit score for up to 7 years. You also have different attributes within payment history. So the time since the most recent late payment. So basically how they're going to calculate that, they're going to look to see when the last reported late payment was, and then calculate the time since then. Now, typically the more recent the late payment is, the higher the impact, but don't just think because it's 6 years ago, 5 years ago, 6.5 years ago that you're in the clear and it's not going to affect you, because just the presence of it on your report is going to put what's called a derogatory indicator. So a derogatory indicator automatically will classify your profile as high risk. So the presence of any derogatory information, whether that's a collection or a public record, a bankruptcy, any of that information is going to be negative for your credit. When it comes to amount of debt owed, another thing you want to consider are the number of accounts that have a balance. Now, you hear a lot about keeping your utilization under 30% or under 10%. Now, that's total utilization, but that's also within account. However, you don't want to have all of your accounts with a balance, because that will negatively affect your credit. Now, FICO high achievers have 3 accounts with a balance reported. When it comes to your credit history length, you have the average age of accounts. So this is just going to be an average of the age of all of your accounts. And then you also have the age of your oldest account. So the age of your oldest account is just going to be how long your oldest or your first account was open for. Now, the 2 other components that only account for 10% is going to be the amount of new credit as well as the credit mix. So in terms of the amount of new credit, 70% of FICO high achievers did not apply for credit in the last 12 months. And on average, FICO high achievers open up account more than 2 years and 7 months ago. So when you open up accounts less frequently, you're looked at as less risky. So if you're not applying for credit as often, you're not going to come across as, desperate or, in a financial bind. And I say this all the time, if you just keep continuously applying for credit, eventually you're going to start to get denied. Now, if you want to ensure the best chances of getting approved for different types of loan products, you want to refrain from applying for different credit products for a certain length of time. Last but not least, you're going to want to have a mix of different types of accounts, including revolving accounts as well as installment accounts. Now, within revolving accounts, you also have bank issued accounts. Now, bank issued accounts hold more weight with the FICO score than revolving accounts that are not bank issued, like consumer finance accounts. A 5,000 My Jewelers Club account is not the same as a $5,000 Chase or American Express type of account. Anyways, that's all I wanted to cover in today's video. Let me know your comments and questions in the comment section down below. And until next time, take it easy and we'll talk to you soon. Peace.